Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Hope you guys did okay in my absence yesterday. I think Julian did a pretty good job chatting with you a little bit about what he's seeing in the market. So I was actually pretty impressed with that. As well, Kevin's driving the bus here, and it looks like he's kicking ass there. So thank you so much, Kevin. I really appreciate you just sort of keeping an eye on things and making sure we stay on course. Let's see. Last time I talked to you guys, I guess, was on Wednesday, and I think on balance, the theme I think right now is just simply fucking ETH orgy here, right? I don't really see the corn breaking out to new highs, and some of the crypto stocks, I mean, they're okay. We're just banging up against top end of ranges. Tell you, broader market breadth sure looks ugly. Maybe the stock market can keep working higher here. But I remember our January barometer report said that there was a dump right at the beginning of the year. Remember we saw last year COVID, sickness, and all that kind of took everybody off guard. I do see, and I find it a bit amusing, but I do see that there is quite a bit of political wrangling going on with the latest stimulus package actually getting passed down in the States. So, keep your eyes peeled. If you find that turns out that the Senate Republicans cannot endorse this, blah, 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 that kind of stuff, you might find that the market's still a bit softer. I think the stock market, and I can't really comment too much about the central planned economies around the world. I do believe that the governments themselves have a much, much bigger sort of stake in the economy and will push things around to get what they want done. So can't really comment on that. But in the West, I believe that the capital markets, until we sort of really get into this next cycle and companies' earnings and stuff like that start catching up. Remember, the S&P 500 trading at about 35 times multiple right now. So I believe that the stock market right now is a crack addict. So stock market got a huge injection there last March, which stopped the free fall. I think that capital gave the Fed further buying power through the year, and I think they came in through about middle of last year and threw another bazooka at the market to keep it going higher. That right now the Fed is sort of like, friendly. We're not going to shit on you. COVID is definitely ramping up around the world. People are pretty stressed out. So I don't see that ending just yet. But I could see, over the next month or so, especially if we can sort of, you start to hear vaccine talk ramping up and this latest sort of second wave peaks out and we start to see. I'm actually hearing a lot of people saying that the vaccines and stuff are, they may not prevent you from getting the various strains of COVID, but they, number one, nobody's died from taking any of these vaccines, which is actually pretty remarkable considering how many doses they've given out. Usually, in every statistical model, there's anomalies. So just the fact that nobody has actually died from this, I suppose, is a good thing. That's one of the sales pitches they have right now. Well, hey, nobody's died from it, so it's got to be good. Mind you, if you're trying to take over somebody's brain with microchips, there's no point in killing them, right? But anyway. So, make hay while the sun's shining. If you can turn a profit through this, great. I was barking online a few days ago, TRIers are in there killing the market trading Chinese stocks. And I'm like, geez, totalitarian dictatorships, what are you doing? But, at the end of the day, I can completely understand you guys go. And this is pretty much how society has worked. Is that goddamn stock is moving up. I can participate and make money off it. Maybe I can take those profits and funnel them towards maybe a better cause or something like that. So I don't fault you for, hey, I mean, a setup is a setup is a setup, and I'm here to make money. I'm not here to subscribe to your silly idealistic notions, Brian. I can completely respect that. I totally can respect that. But just understand that Brian's an old curmudgeon, and he believes in all these freedoms that he's barking about. So it's not likely you guys are going to get me to come on the China bandwagon. But nonetheless, enjoy it. Have fun. I mean, there's money to be made. So, a setup is a setup. Kevin, I think you banged out a double on a Chinese stock today, didn't you?
Did on QD.
Yeah. So there you go. I mean, awesome. Way to go. I don't buy Apple. Are you assuming I buy Apple? I don't buy Apple. And frankly speaking, I think Apple basically sold the West out, as far as I'm concerned. But that's the irony with corporations. Corporations themselves, they have no conscience. I would argue half of the reason why we see our society the way it is right now is because all the corporations about 20, 30 years ago went, fuck. You mean I don't have to pay these employees a half decent living wage to make my products? I could take my business over here where I could pay these people slave wages and make my products. I'm heading off to slave land, baby. Woo! I mean, that's capitalism. Brutal. Anyway, get off your what do they call it? What is it called? Anyway, just shut up, Brian. Okay, enough said. So, markets, it's kind of, I don't know, we are starting to see, it's fascinating, of course, how Ethereum and a lot of the cryptocurrencies have started to turn up here. So our little breadth indicator seems to be seeing something there. Interesting how European stocks are trying to firm up here. This is interesting in the regard that European central bankers and stuff like that. No, by the way, I saw this. The European central bankers are now actually calling for an outright ban on owning cryptocurrencies over there in Europe, by the way. I don't know whether you guys saw that today or not. But I think with the sort of euro coming off, the business prospects for Europe are actually a little bit better. And in a weird sort of way, you might even see that with both Canada and Australia, that if the US dollar starts coming back in earnest, then all of these companies, all their profit margins start getting a hell of a lot better if they're exporting into the US market. So that's an interesting tell, right? You can actually see from like sort of an international perspective, money's coming back into this part of the market, but it hasn't quite returned back to the US market. That's interesting. And of course, you guys are all watching the Ethereum craziness, so you're all. It shouldn't surprise us to see this turning back up. There is ETH. Look how strong these all are. Ada. I remember there's one guy. I think his name is David over in Switzerland. He was staking just a mountain load of ADA through that last 17, 18 market. Sure hope he held on to those because fuck, he'd get stinking rich now. And if anything, this is such a great analogy. 17, 18, everybody comes piling in. Remember, 3 to 5 year time horizon, ironically enough. This is hilarious. I mean, I just showed that. I don't want to show it because somebody said, hey, you got account numbers and shit on there, Brian. Careful. But actually, I think I was sharing it with the team. I mean, this is almost funny because I just don't even really care that much. But the garbage over on the Trex account, the garbage is actually worth about $128,000, which is kind of funny. Well, that's a pretty damn nice garbage can you got there, Brian. So we'll see what the garbage does. And of course, we got big old whack of garbage over on Binance and Polo and all those exchanges as well. That's just Trex. So we'll see how that goes. I actually get the feeling we're going to head into sort of a summer of orgy within the altcoin space. It really feels like that's what's setting up here. Now, I don't know whether that's a good thing or a bad thing, but that's what it feels like it's setting up. As I sort of intonated earlier, the corn's actually down right now. I mean, wait, I thought this thing was a rip-roaring bull. What the fuck? So the ETFs, they're not really getting that much action. And you could see, and I've sort of talked about this before, with this kind of volatility, don't be surprised if we're, basically in this massive trading range for a while. Some of the crypto stocks are, bumping up against the top ends of their ranges. You can see things like Riot's back up, trying to fill this gap in. Mara, same sort of thing, rally back up, fill in these gaps. But, this is, like, me and trend lines. I don't like to take trades that look like this. This to me looks very, very dangerous. In fact, if we lose this low here today, that's an empire, right? And that's actually a sell signal for me there. And what the fuck's going on here? HUT's down. SRAX getting its ass kicked. Ooh, 8s and 9s. Don't like to see that. So, I'm not overly excited about what I'm seeing out of the blockchain space, which in a weird sort of way kind of leads me to believe that this is very focused, and actually even maybe the stock people kind of see what's going on here, right? And of course, that's this conversation. This is so damn textbook. It's ridiculous. So, I was putting out fucking Brian and his smart ass, right? I was putting out tweets like, okay, orgy is on. Just got the phone call from Betty. She's ready to fuck like a rabbit. What? Sorry. So, orgy. Man, where's Shade? Hey, I could, you like that one, eh, Khalid? Anyway. So, in the shorter term, I was also putting out notices to this because, here is our 8th event. I thought it was really interesting how the market itself with the foggies is aligning with bot objectives nicely here. When how many times have you guys done this now? It's absolutely incredible. When you draw 50% rules, and it turns out that the GAN 50% level aligns perfectly with the foggy level. It's almost like the universe is trying to speak to us, like, you guys, this fucker wants to go up here. So anyway, it is what it is. If you can trade this, that's a cute little double bottom in there. There's another low. And then even on the retail open this morning on the non-farm payrolls report, there's another low. You can't say as a professional trader you didn't have messages to get in here. It's just a question of whether you want to take the trade or not. I'm not trading Ethereum right now. I don't really care about any of this stuff, but do with it as you please. There's nothing wrong. It's perfectly valid setup. And also too, like I said, when you get these two the level 2ers are doing gap theory today, so I was super stoked to hear how excited they were when they were going through the gap modules. And that's the same sort of thing. Somebody in the level 2 class today goes, this is so cool. Fib levels line up with gap levels so perfectly. And then what you're going to find, you level 2ers, is that volume profile levels line up perfectly with gaps and fibs and previous market structure. And it's just like, I can't believe how telegraphed all this shit is. So anyway, that should be fun going forward. Long and short of it here, in through this weekend, this is basically my expectations. I don't know. As for the trade setup, I don't know whether these numbers are totally crisp, but you can get the idea here. Maybe if we fractal out here, you just hop off and wait for the next bullish fractal or something to sneak back in here. But on balance, I'm going to be thinking that this is the direction we're heading. So I'm not going to shit on your rally, guys. Sorry. I'm not. That's good, right? So in the face of this, is there any particular market that's doing pretty well? DeFi. DeFi. And I think this is actually what the ECB guys are getting a little bit stressed out about. Now, does that maybe look like it's gone a little bit too far? Let's be honest here, folks. You think you coming into the market now and thinking about, hey, I'm going to hunt buy signal in DeFi. Is that really the smartest idea? I wouldn't be surprised after all these fireworks. We're probably going to come down, do Wyckoff checks, probably swim around this area, probably take out that low, right? That low. You level 1ers, you're going to be learning about institutional fingerprints shortly. So ironically enough, these are the 3 levels I would be watching on this thing closely. So, and don't be surprised if there's more of this over this weekend. This weekend could just get absolutely stupid in this space. I noticed that names that I like this Steak, right? Look at him go. This is what you want, right? Well, so I'm in a risk-free trade on this thing. I couldn't give a rat's ass. Let's see what kind of money these clowns want to give me. I don't know how high is, but I couldn't come in and buy this here now. Does that make sense, guys? I mean, that's really the most important thing here. From a guy, my perspective, chicken shit, got to define risk, keep it simple, nice and conservative. Ironically enough, if I was in a shopping mood, like these are the kind of names I might be interested in working stink bids in to see if I could join this trade. But that's probably not in DeFi. That's NEM. I don't even know what those guys do. Isn't that? I thought NEM was the Chinese version of Ethereum. So I don't know. OXT. Fuck, look at that move. And if I'm not mistaken, didn't Sjord's little engine get all excited about this thing yesterday? I seem to remember. Which one was that? OXT. That's what this is, isn't it? OXT. Yeah. So Sjord, his little signaling engine here. I don't know whether you guys have access to this. He might not let you have access yet. But I thought this was so cool. Look at yesterday, February 4th. OXT ETH. OXT ETH. I mean, he's all super excited. This little engine he's built is just fucking killer. So like I said, I don't know whether you guys have access to that yet or not. If you don't, I apologize. Didn't mean to tease you there. But he's firing on all cylinders. And I got to say, I looked at that chart yesterday when I saw the signals come in. I was like, yeah, I'm down. That looks good. Nice, strong momentum push. I mean, W's within W's within W's. And there it goes. And the interesting thing about this, guys, is this is so cliche. Reload zones, regional market structure, W's coming in. What do you think the odds are that were like momentum divergences that were coming in down here? I bet pretty good. I mean, this is everything that we're trying to teach you in this school and the education program. Hey, Will says, yes, twice. Well, there you go. Double D's. You know how much Brian loves double D's. Right, Colleen? I spit Colleen. I don't know why I always put the O in there. Sorry, man. Actually, I was popping in the ladies' lounge this morning answering a couple questions. They're doing really great work in there. You better be careful, boys. These ladies, they're going to really show us up. I read another article. I found another article today saying, oh, by the way, women make far better investors than men. Yeah, so, that's that OXT I was talking about there just a moment ago. Holy shit, look at this little ANT. I mean, is there any letter of the alphabet we're supposed to be paying attention to that might help us make money from trade? Can you guys see this? Does this logically make sense? What is happening here? This isn't rocket science. That's the craziest part about all this. It's not rocket science. I don't know. Well, again, Brian just blabbing away. So, W's, you want to make money from trading, just get in there, build your plan. Take appropriate risk. Don't take no wooden nickels and just get in there and make some money. Look at my burger. I love that burger. That burger is going so much higher. Hey, I noticed Digi's looking really interesting in here now. Look at this bottom coming in on Digi. I mean, this is just sitting right here. You can see I love buying at the 78.6. It's not even at the 78.6 yet. It's still battling. And actually, this is what I meant by institutional fingerprints there earlier. Like this is the level where this market bottomed, right down here, down, up, down, breakout, right? This is the fight level. Notice how they just bring the market right back down into the fight level, and lo and behold, look what's starting to happen here. So there's just so many of these things. I mean, they're all over the place. I can't, I couldn't possibly go one by one because they're everywhere. So, like I said, get out there and, look at this power ledger. Did we lose interest in this? I seem to remember these things were all the rage at one point. You can see I picked up a little bit here. There's a good reason why you nanny nibble in this game, folks. And actually, we're thinking about doing a free I think maybe we'll call it Nanny Nibbles in I don't know who owns that name, but we're gonna do like a free video of a walkthrough, like maybe like a half hour, 45-minute in-depth presentation with a PDF slideshow attached, just so we have on record, online, completely free, the officially correct naming of things like little old lady approaches to risk management and that whole approach to investing money in the market. I don't even want any money from it. I just want the public to understand that little old lady was a type of client that I had. So, and this is actual experience. I can see the little old ladies that were my clients that basically were these people. And this is the kind of thing. Well, Brian, do you think I could double my money here? Well, I don't know. It's crypto. It's super insanely speculative. Why don't we just go throw 1% of your portfolio in here and let's see if this thing bottom? Nope, it hasn't yet. Okay, well, here comes another bottom, Brian. Should we take a whack? Okay, well, let's go maybe put another 1% of your portfolio in, and let's see whether this is the bottom. And it might not be. I mean, we're getting awful close to zero, so I suppose we can't go down further. But I mean, just interesting enough, right? You could do a 52-week range. You can just see that probably it's going to be back probably right up at my original buy level in the not too distant future. So food for thought, right? If you are little old ladies, if you are nanny nibblers, right? This is the absolute breadbasket of a market. Totally awesome. Probably a good idea if you are interested in these names to look at them versus USD. Make sure they've got, or euros, whatever your currency of preference is, just to confirm that they've got actually like solid W's working on a currency base. This XTC, this is another one. I've been watching this. I think this was one of Chico's from a year or so ago. I mean, look at that. Oh, look at that tail right into that reload zone. Can you see that? If I was on my game and I was interested in crypto, holy crap, that was my trade window right there. So, there's lots of these things just doing this stuff. So just get out there and have some fun, right? And of course, if you're just starting, you're level 1 or whatever, then just paper trade the shit out of this. These damn markets, they move up and down and up and down and up and down. Yeah, you wait 6-8 months or so and we'll be right back down into a down market and you can start hunting W's again. But right now, I think this is a really good opportunity for all the level 1ers to get in those 100 paper trades. Go and find 100 W's. Log them, track them, see what happens. The only way you're going to believe this is you got to put the time and effort in. And actually, that's a great dovetail. So speaking of time and effort, remember there's a million different ways to skin this cat. A million, at least. One approach is to come at this market from like, this is sort of like shit coins, right? This is totally one unique approach to the market. Another approach to the market, which, and I lived this life for years as a prop trader and as a futures broker, is things like trading futures contracts and using things like the DOM and volume profile and these kind of things, these tools. I don't have a market profile on here though, but a very different and unique way of trading the market. You can make tons and tons of money doing this. And one of our OGs, I think we can call him an OG now. He actually went off to the prop trading world, and now he lives in that world, kind of like Kiran. And he's super, super excited about things like order flow and, market profiles and trading with the DOM. And he asked if he could come and speak to us today. And he has a really nice presentation. He's done this before for us. And he said this time, actually, this presentation is much more action-packed. So I'm super excited about today. As you can probably tell in my chat here, I mean, I'm pretty uppy I think I said that this was because I'm going to be taking notes and I really want to focus. This is like one of the first times in probably, I don't know, 6 months or so that I actually ate a full breakfast. I had soft boiled eggs and toast and the whole damn 9 yards because I wanted to be super perky for this guy's presentation here today. So without further ado, we have Daniel. Daniel, are you on the call? Come in, Daniel.
I'm here. Hey, guys.
There he is. Now, Kevin's driving the bus here today. So if Kevin I've killed my screen share. If Kevin can make sure that YouTube sees inventory and order flow trading part 2. I mean, first and foremost, it was great to hear your voice again this morning. And you're all perky and excited. So how's life been treating you lately, Daniel?
Not bad. I quit my 9-to-5 job at the end of last year.
Hey, there you go.
Yeah. Because I got to get my things going here. So yeah, since then I've been studying a lot these order flow types and this kind of trading, which it's challenging, but at the same time, it's always kind of a journey, and I think it's always nice to learn something new.
Yeah, well, I'm super stoked. I got a funny feeling we're all going to learn something here today.
Yeah, I hope so.
I'm gonna put myself on mute. If you need to interact with Kevin, just bark at him. Really, I just want to sit and listen to you. So you've got the floor, sir. Super excited. Tell us what's on your mind and go.
All right. So can you see my screen? Like when I go, let's say on the right hand, or when I flip the slide, can you see that?
Yeah.
Okay, good, nice. So welcome everybody to my second presentation about inventory and order flow trading. And I did one at the end of last year. And if you haven't watched it and you have got some time, maybe you can rewatch that, because today we're gonna dive a bit deeper into these concepts. And I got such a nice and positive feedback from the community last time, and I missed a couple of very important aspects. So I was like, okay, I gotta do another one at some point. And there we are. So I hope you guys enjoy it. And let's just get started. So there's a little formal disclaimer. And what are we gonna talk about today? Well, first of all, I want to give you a brief recap of the last presentation that I did. And last time I emphasized the trade context and especially the trade location a lot. So this time, that's basically all I'm going to talk about. Then I'm going to round it up with some real trade examples using Sierra chart. And then I'm going to conclude the presentation and leave you off with some motivational words. So let's just do a quick recap. Well, first of all, we looked at the price ladder, the current price is basically a diagonal relationship between the current best bid and the current best offer. And today I'm a bit better prepared, so I got a little pen tool to write on this screen. So let's make it a bit thicker, maybe. Doesn't work. Okay. So let's say we have a price ladder right here with all the prices on the right-hand side. Okay. And we have the last traded price, let's say here in the middle. Then we have all the bids here on the left-hand side and all the offers on the right-hand side. And what I mean by this diagonal relationship, it is that the current best price is always this diagonal relationship between, as I said, the current best bid and the current best offer. And this is pretty important to know going forward. And basically all those bids and offers in the price ladder are also referred to limit orders or inventory. Yeah, and those provide the liquidity for the other type of orders called market orders, the more aggressive type of orders, and which basically execute into these limit orders. And those ones are the orders which actually move the price or causes the price to move from one level to another. Then we covered the inventory heat map, and this is a nice and handy tool in order to filter out large bids and offers in a graphical manner. Yeah, so since we're all kind of visual persons, it's pretty nice to have these let's say the price ladder in a graphical manner, and yeah, this is a nice concept as well. Then furthermore, we covered then that there is two key inventory criteria. First of all, let's say if we want to confirm a price move, we gotta have a large resting inventory. Let's say we have an uptrend, for example, then we gotta have large offers sitting above the price, or let's say way above the price, which acts as a price magnet. And on the other hand, we also need inventory stacking up close to the price in order to confirm the price action. So let's say like we mentioned, we are in an uptrend. Then we gotta have also like aggressive bids showing up at the price, trying to chase the price up, and at the same time offers pulling away from the current price, because those guys somehow notice that it's an uptrend and they know that they can get a higher price. So they move away and put their order somewhere way more above the price ladder or above the market price. Yeah, then we looked at the so-called footprint chart, and this shows you actual traded volume. Yeah. Actually, yeah, the market buying and selling in a candlestick chart. And within these footprint charts, there's a very, very powerful concept called sell and buy imbalances. And when those two things appear at certain areas, it can reveal very strong, let's say, or very powerful momentum, which we can see later on in a couple of trade examples. So, yeah, first of all, let's talk about the trade context. Yeah, and actually, this is one of the two most important aspects in day trading. And even if you say, well, I don't know, day trading is not for me, then it's also one of the two most important things in trading in general. And well, first of all, you gotta know what kind of market sentiment we are. Yeah. Or do we have any fundamental news scheduled? Yeah, is, for example, the Fed chairman speaking in the evening? Or are there any economic numbers coming out, like, for example, GDP data or the unemployment rate data or something that can actually influence the price or the market and move the price around? And I also caught a nice little, or recorded a nice little example for you guys. Well, this right here, this is actually from Monday, where the ISM manufacturing index data came out. So I'm gonna just play it. And the best thing you wanna do when such numbers come out, you don't wanna be in a position at all. So you can see at 10 a.m. these numbers come out. You can see that the market is pretty slow right now. And as soon as the numbers come out, you can see like the algos going alive. Yeah, they're like fighting around and stuff, and a bunch of nonsense is happening. And from a risk perspective, this is, yeah, you don't want to be involved in that, because you can also get stuck in a position. Yeah, you can see right now what's happening. So this thing's just yeah, all over the place, and it's basically, and this was even a small session. And what you can also spot right here, it's just pretty funny. Look at these offers right here. This is actually a spoof happening. So as soon as the price moves to these orders, they disappear. Did you see it? So right here, there wasn't even an intent to be traded. I'm just gonna stop and show you as well. Like as soon as the price came to this level, those guys just disappeared. Yeah, and you can also see that like only 120 market buyers traded at this level, and not even close to these 608. So what I just wanted to illustrate you guys is that if some numbers or something like that come out, just as a risk management on a risk management base, close out your positions and wait until the dust settles. So then you gotta have a clue about the current market state or the general trend. And well, there are three trend types. We got an uptrend, a downtrend, and a sideways trend or a consolidation. And if you're not sure about which, let's say, trend phase we're in, then there's a saying that, when in doubt, zoom out. So if you're looking at a 10-tick chart, for example, and you're not sure, maybe not a bad idea to zoom a bit out and look at a 30-minute chart or a 2-hour chart, or maybe even a daily chart to get an idea. And generally, it's always most easy and forgiving to trade with a trend. Yeah, and what I mean by that is, if you trade with a trend, you can also get away with some sloppy entries because you have the trade on your side. On the other hand, if you're fading a trend, you have to be very, very precise with your entries, and everything has to be in place perfectly. And even then, it has the lowest success probability. So I found that it's the easiest way to get burned, to fade a trend or fade a strong trend. And I think everybody makes this experience, and it's really the easiest way to wait for a clear trend and then to jump on board. And well, how do we determine such things as a trend? Well, there are three let's say aspects how we can determine the trend. Well, first of all, we can determine it by the macro structure. Then we can look at also at the market open and the price related to the market open, and the price related to the so-called volume average, weighted average price. Yeah, and we'll take a look at each one of these points right now. So considering market structure, I guess those TRIers who did the level 1 program, they're familiar with this slide. It's in week 4, we basically define a trend or an uptrend as higher lows and higher highs, a downtrend as lower highs and lower lows, and a sideways trend as equal highs and equal lows. And this is a pretty easy way to determine the trend, since just determine it by the current price structure. And another way to determine, let's say, short-term trend shifts is this concept right here that you learn in the level 2 program in week 2. And this is the concept of horizontal support and resistance. And when you look at it, for example, let's say here, this was a key support level, and it gets broken to the downside, then it becomes a resistance level on a retest, And if we say, like, for example, many support or key support levels get broken to the downside, well, then many key support levels turn into resistance, and that could be an early sign of a trend shift. Then there's another way to determine it. The so-called market open and opening range. And I don't know if you guys watch the market forecasts by TopStep, hosted by John Hoagland. He sometimes, if you closely listen to it, he sometimes refers to the opening range and says something like, watch the first minute of trading after the market opens. This could give you early clues about the trend direction. And that's exactly what he means. Because you can also look at the first 5 minutes or the first 15 minutes after the market opens. And as I said, this can be used as a pretty pretty good sentiment proxy because let's say we have a pretty tight opening range, yeah, and the market is trading, let's say, for a huge amount of time within this opening range and fails to break to one side or the other, then this could give us some early signs that, okay, today is more likely going to be a low volatility, slow range type of day. On the other hand, if it's, let's say, a opening range of 20 points or something, then this could give us an early sign of, okay, there's a lot of volatility and a lot of velocity in the session today. And you can also watch the skew, like, for example, how when the opening range is established and how the open is skewed to one side or the other side within the opening range. And this could also give you nice clues. So in fact, the market open is actually the most important price level of the day. Yeah. And I found a nice study by this gentleman right here, and he looked at many market sessions in the past and compared them and looked, or basically he found out that more often than not, and especially in volatile markets, the open tends to be rather at the extremes of the day, meaning the high or low of the day, rather than somewhere in between. Yeah. And as a rule of thumb, you can say that, well, if the price is above the open, this is rather considered bullish. And if the price is below the open, we can say that's rather considered as bearish. And lastly, we got the volume weighted average price. Yeah. And this is basically an indicator based on, or it basically is calculated by or based on the current price and the volume. So it acts similar to a moving average, but instead of using time, it uses the variable volume. And I don't know if you guys are mathematics aficionados, but it's basically defined as the sum of the price times the volume divided by the sum of volume. And it's that important because it's also used as a benchmark by big institutions like mutual funds and pension funds. And if you imagine that these guys, they have to get in and out of their positions, let's say on big size, let's say on 1,000 contracts, and they have to ensure that there is enough liquidity traded at these entry and exit levels. And such a variable or such an indicator right here, it's somewhat of a dynamic indicator where they can say, okay, there is enough volume traded so that we can at least partly get out or get into our position. And there's even a rating of mutual fund managers or pension fund managers on how close they execute their positions to the VWAP. So if they execute their positions far away from the VWAP, they're let's say rated as bad, and if they execute their orders close to the VWAP, they're rated as good. So it's that important.
Is that like actual information that we can mine?
What do you mean?
Like actually get that report of who's good and who's bad?
That's a good question. Yeah, I can figure it out. I think I found that on Investopedia, but
that would be great information to have. Sorry to interrupt. I've just
that's a good idea. Yeah, I gotta figure that out. Maybe I think I'm gonna Google that later. Maybe I'll find something later on.
Thank you, sir. You know, I've told the community about good old Bob Iamadico, Bob Iannucci. I don't know whether any of you remember. He used to be on CNBC a lot. He used to trade with us at Top Step, and he used to run a fund of funds. And this is the kind of stuff that he would use to determine which mutual fund he wanted to be in. So that's cool information.
Yeah. And again, here, it's also the same thing. So if the price is basically trading above the VWAP, this is rather considered as bullish. And if it trades below the VWAP, you can say it's rather bearish. So it's more or less like a moving average. But yeah, it has another type of information for especially, let's say, futures day trading. Okay, so since we got that right now, so let's say we we determined the trend. Yeah, let's say we are in an uptrend. All fine, but how do we actually determine where to get into a trade? And well, guess what? The first 3 points that we just covered are also excellent trade entry and exit tools. Yeah, so macro structure, of course. Yeah, horizontal support and resistance level, and especially if those flip. Yeah, if let's say a horizontal support level gets broken to the downside, then it acts as a pretty nice entry tool to get on a short position on a retest, yeah, as a resistance. And yeah, we also do a nice exercise in the level 2 program to trick out the charts. And yeah, if you haven't done this exercise, maybe not a bad idea to do that, because yeah, that's basically yeah, a lot that day traders use, and that you can also use in swing trading. Yeah, so yeah, yeah. Then the next,
you're absolutely right. This concept. The only thing I would suggest here, people who are just auditing the site 30-day trial, maybe don't just jump into this day trading world willy-nilly. People in the education program, you're level 1ers, you are learning the process. Like Daniel said here, a lot of these kind of concepts that we're going to be talking about here, where they're a little bit more of our advanced program. So, and coming out of the level 1, demonstrate you understand the process, demonstrate you understand things like divergence and market structure. And then in the level 2 program, we'll start piling on more. And the level 2ers right now, they're doing gaps, which of course is another awesome trade location tool. Volume profile levels, which you see, of course, on his screen coming up. So, and what's so cool is these things, when you get, I don't know whether Daniel, you're going to get into Confluence, but it's so
yeah.
These things all come together. It's like the level is just jumping out at you going, hey, pay attention.
yeah. Oftentimes it's pretty cool how these trades literally develop, and you can already anticipate that the price is coming into your level. And I got later some trade examples that show them that pretty nice. And to yeah, to what you said, Brian, I'd even suggest that you complete all the 3 level or all the 3 school programs at TRI, because especially in level 3, you learn very advanced stuff and nice stuff that helps you pretty much with day trading, if you consider that. And yeah, so if you just are in the level 1 or level 2 program, I'd give it a bit more time, and I'd give it also a bit more of market experience, because yeah, day trading is actually I'd say the most challenging stuff.
Right. I just wanted to throw that in there. I apologize for interrupting. You're doing a beautiful presentation. But
Thank you.
He's just going to throw in his 2 cents every once in a while, right?
Yeah, of course. Yeah, so, well, yeah, so the next important thing, yeah, like we mentioned, the market open is also a pretty nice entry location or exit location tool, because, I mean, imagine that these big institutions, I mean, they know about the importance of these level, and they know about the importance of the market open, and yeah, the relationship between yeah, the actual trading session and the open. And let's say if they miss to enter a position at the open, well, and the price comes back to the open, and they get another chance, well, guess who's waiting there and waiting to enter the position? So yeah, this is also a pretty nice yeah, trade location tool. And furthermore, yeah, the VWAP, we already covered that, why it's that important. Then you can also look at previous day and overnight levels, yeah, meaning the high, low, and close. And I actually saw a nice presentation by Mark Dudding in the Zone.
Zone? Is that what you're talking about?
Exactly. And he also has a presentation on YouTube. I think it's 4 parts. And I think in the last part, he refers to that. So that's also pretty cool.
In the library, I think we have 1 or 2 of his links in the sort
Yeah. So
Yeah,
and it.
if you want to get to know a good trader, one who's very humble and he really respects the whole idea of no ego, you're just trading setups. Mark Douglas is definitely a good resource to think about. Yep.
True. Yeah.